In the markets, if you look, stocks got crushed. You had triple-digit losses for the Dow. You had oil down below $30 a barrel. And in fact, in the last 2 days, you have seen the steepest two-day decline for oil in almost 7 years. Chief Economic Advisor for Allianz, Mohamed El-Erian, is with me now. Mohamed, great to speak with you. I should mention this book. You are also the author of this recent The Only Game in Town, so congratulations on that. But I need to ask you while I have you on global growth, your outlook. Is it so slow? Is it so pessimistic that the only logical reaction is to sell oil and stocks?
No, what we're seeing in both the oil and the stock market is a response not only to a more uncertain global growth outlook, but they're responding to two other things. Both of them have lost their seatbelt. In the case of the oil market, it can no longer depend on OPEC as the swing producer on the downside. It can no longer depend on Saudi Arabia to cut production to support prices. And for stocks, they can no longer depend on the central banks all being on the same side supporting financial asset markets. So the first element, they've lost their seatbelt. And the second element is they both have limited liquidity. There's very little pools of patient capital to be on the other side of this enormous volatility.
Okay, speaking of enormous volatility, I mentioned the oil drop. You know it well. Goldman actually putting out a piece today saying it's too late for OPEC to support prices, saying $26 a barrel is next. Do you agree with that, and do you agree with the premise of the call, which is basically it's going to take too long to enact production cuts and stockpiles are growing?
So I don't think OPEC is even interested in going back to the role of the swing producer, and for good reasons. They've figured out that every time they reduce production, they lose market share. And in this world of alternative energy supplies, it's very difficult to regain market share. So OPEC will not be cutting production to support prices. And if they do, it won't be effective. So I agree with that bit of the argument. As to whether we see 26 or we see 35, I really don't know. It is enormously volatile in the short term. There's a lot of technical issues. What I do know is over the longer term, demand and supply factors alone don't justify oil in the 20s. So if you ask me to look 12 to 24 months, I think we go higher from here. But the short term, very volatile.
So, Mohamed, I want to ask you what led you to write this particular book? You're a prolific writer. What made you want to work on this one?
It's a call for action. It's the sense that the new normal of low growth and excessive dependence on central bank is getting exhausted. That the path that we're on for the global markets, for the global economy, is coming to an end within the next 3 years. And this book tries to explain why that's the case and tries to explain why the alternatives that are out there are subject to our own choices. And it really is a call for action on the political front for people to start implementing pro-growth policies.
All right, Mohamed, I'm going to read it. I thank you in the meantime for the time. So great to speak with you. Mohamed El-Erian joining me there from Allianz. And you heard he is the author of this new book, The Only Game in Town.